The dollar's collapse isn't coming. It already started, and they buried the evidence. For most people, the illusion still holds. The stock market's green. The media says inflation is cooling. And if you ask the average economist, they'll tell you everything is within normal bounds. But peel back one layer and the cracks start to show. We're no longer facing the threat of a dollar collapse. We're living in its earliest phase, not with a crash, but with a slow, deliberate unraveling. The kind you only notice when it's already too late. This isn't a prediction. It's a forensic report. The collapse is in motion, and the people who understand it best, they're not warning you, they're protecting themselves. Because they know, once global trust in the dollar dies, it doesn't come back. Let's look at what they're not showing you. In 2025, the dollar has already lost nearly 9% of its strength. That's not against fringe currencies, that's against the euro, the yuan, and the global index. At the same time, gold is hitting record highs, and BRICS nations are transacting without the dollar at all. They'll tell you this is about interest rates or temporary pressure, but that's misdirection. This isn't a cycle, it's a controlled exit, and that exit is accelerating. Gold is the first clue. In the past 8 months, central banks have bought more gold than any time in recent history. China, Russia, India, even countries inside Europe are moving their reserves out of dollar exposure and into hard assets. Why? Because they see what's next. The U.S. national debt just passed $36 trillion. That's not just unsustainable, it's irreversible. The Treasury is running trillion-dollar deficits like clockwork, and there's no plan to stop. The only way to fund this chaos is to keep selling bonds. But the buyers? They're disappearing. Foreign demand for U.S. debt is collapsing. Japan and China are scaling back. Sovereign funds are diversifying. And in their place, the Federal Reserve, quietly buying up bonds with freshly created money. That's not a sign of strength. That's internal monetization. And it's exactly how fiat systems implode. You won't hear this on CNBC. You won't see it trending on finance Twitter. But the moment the U.S. government starts borrowing from itself to fund basic operations, the clock starts ticking. Confidence is a fragile thing. Once it's gone, there's no printing it back. And here's where it gets far more serious. This November, the global financial system flips. The ISO 200 migration completes, meaning nearly all cross-border money flows will operate on a new standard. A standard designed for digital value, tokenized assets, and blockchain integration. It's not just an upgrade, it's a bypass. For the first time since World War II, the dollar is no longer required to move money across borders. Nations can settle directly, in real time, with assets the U.S. can't control, censor, or inflate. It's the quiet end of swift supremacy, and it's not a coincidence that BRICS nations are pushing full throttle into this transition. They've launched blockchain settlement layers, tested gold-backed trade contracts, and are formalizing energy deals in native currencies. Oil is being sold in yuan, gas in rubles, grains in rupees, and soon, programmable tokens. The petrodollar system, the last pillar of dollar dominance, is being dismantled deal by deal, and the average American still has no idea. They're watching stock tickers, not trade flows. They're reading CPI reports, not debt supply curves. They're holding cash, believing it holds them back from risk when in reality, it's what ties them to the collapse. The scariest part? None of this feels like panic, because it isn't. It's silent. It's orderly. It's surgical. That's how reserve currencies die, not with explosions, but with erosion. Not from within, but from abandonment. You've seen the clues: gold surging, Bitcoin stabilizing, XRP holding its floor, treasury auctions falling flat, currency swaps cutting the dollar out entirely. And yet, officials keep repeating the same lie: the system is stable. What they mean is, it hasn't crashed yet. But collapse is rarely a moment, it's a process. And we're in it. As bond markets lose depth, the Fed will be forced to intervene even more. That means printing, which means inflation, which means loss of trust, which means even more capital flight. It's a loop, and it only spins faster the longer it's ignored. By the time the average person feels it, in higher prices, in failed retirement projections, in collapsing currency confidence, the exit will be sealed. The new system will already be live, and the wealth transfer will already be done. The elites know this. That's why they're not holding cash. They're holding physical assets, offshore structures, and programmable instruments designed to move outside the old rails. They're building lifeboats, quietly, confidently, and they're hoping you don't ask why. Because if too many people realize what's coming, the collapse speeds up. The illusion breaks, and the scramble begins. But even now, with the writing on the wall, the narrative remains tightly controlled. You'll hear talk of soft landings and fiscal discipline. You'll see smiling analysts on cable shows pointing to tech stocks and job numbers. You'll be told that this is just another adjustment, a small recalibration in the global system. But what they won't say is that the pillars of dollar dominance have already been pierced. Foreign energy transactions, once priced almost exclusively in dollars, are now being settled in yuan, rupees, and rubles. Major economies are trading oil and gas without touching U.S. infrastructure. The petrodollar system that propped up demand for decades, it's vanishing. Not loudly, not with headlines, but with bilateral deals. Month after month, even financial messaging systems, the plumbing behind global money flows, are shifting. ISO 22022 isn't just a coding upgrade. It's a gateway to a new class of programmable money, one that doesn't need Washington's approval or Wall Street's clearance. It's no longer about if the world will leave the dollar behind. It's about how far along they already are. And the tragedy? The average citizen has no idea. Their retirement accounts, pensions, and savings are still built on yesterday's assumptions. They're playing in a system that's being rewritten in real time, and they're the last to be told. But here's the opportunity most people miss. Collapse and rebirth often happen together. When one system erodes, a new one always rises to take its place. The question isn't whether the dollar will survive. The question is what comes next and who's positioning for it. Because once the music stops, it won't matter how much you trusted the old system. It'll only matter whether you acted while the window was still open. If you felt it, if you've noticed the silence around this story, it's because you're not supposed to. But that awareness is your edge. And it's exactly what Wealth Signal is here to deliver. Subscribe now and stay ahead of the noise. Because by the time the headlines catch up, it'll already be too late. But even now, with the writing on the wall, the narrative remains tightly controlled. You'll hear talk of soft landings and fiscal discipline. You'll see smiling analysts on cable shows pointing to tech stocks and job numbers. You'll be told that this is just another adjustment, a small recalibration in the global system. But what they won't say is that the pillars of dollar dominance have already been pierced. If you felt it, if you've noticed the silence around this story, it's because you were meant to. That awareness? It's your edge. Wealth Signal is here to decode the noise, expose the shifts, and keep you steps ahead of what's coming next. Subscribe now and stay alert, because by the time the headlines catch up, it'll already be too late.